Oh, well, hello. I'm Ty, and here's my garden, and I have a topic to talk about today with regard to discussing the tax treatment of meals and entertainment after the recent 2017 tax law change that we had regarding the deductibility of entertainment and the effect that it has on deducting business meals. So you may have heard about this, that when the new tax law that was passed in December of 2017, there was a prohibition put in against entertainment expenses, and historically there was a deduction allowed 50%. You could take up to 50% of meals and entertainment that were otherwise an ordinary and necessary business expense, and you could also take for qualified entertainment expenses, you could also take a 50% deduction. So when the tax law was changed in last December 2017, they removed the ability to deduct entertainment expenses. So entertainment expenses classically would be, maybe you take some clients or vendors or contacts or business associates as part of your business. You take them to a sports event, right? And that might be a entertainment type expense that previously could have been deductible if you met all the criteria, and now it's not deductible. So the question that's been on everyone's minds for a while now on this was, well, at what point would a meal expense be considered an entertainment expense? Is it possible that under the new law we might lose deductibility of some business meals because they might be considered more entertainment related than just a classic kind of business meal? And so the guidance on this came from the IRS in September, and it's fortunate. It is, I would say, fortunate in that it's taxpayer friendly. And I feel it's taxpayer friendly, maybe because in my own business and in the businesses that I work with, it's far more common to do business meals than it is to do the entertainment venues. And the guidance makes it pretty clear that the deductions that you normally would have taken in the past for business meals are still going to be fine. They're still going to be deductible up to 50%, and that they're not going to be tainted or considered entertainment usually that would not be deductible. And so that's good news. And the guidance gets into some examples and goes a step further and basically says, well, even if you're eating the meals, even if you're having a business meal at an entertainment venue, it could still be deductible up to 50%. And the key issue, or the key to the guidance on that, was that the meals are separately stated in the invoices, or they're separately invoiced. You get a separate receipt for them. It's clear what amount you're paying for that is a meal versus the amount that you're paying for versus an entertainment venue. And the specific example they use is like a sporting event. If you go to a sporting event and you have tickets to the sporting event, those tickets would not be deductible any longer, even if there was a business purpose behind it, so to speak. But it still just wouldn't be deductible under new law. But if you then bought hot dogs and a soda at that sporting event, and you have a separate receipt for having bought the hot dogs and soda, then it would be, if you otherwise met the criteria of being business meals, which they're looking at. The things they're looking at is, would you consider this to be an ordinary and necessary business expense to as part of working with a business contact? You're buying a meal as part of that function. You guys are eating together. It's a normal ordinary thing to do in the context of your business or in the context of your industry, and other prudent business people do similar things. That's the ordinary and necessary and reasonable test. And are you, as the taxpayer or one of your employees, present? Is there an actual client or vendor or business contact that's present? All those are the kind of the things that they look at. Is it not? It shouldn't be lavish or over the top in the amount. As long as you meet all those criteria, then having an expense, and they use the exact example of concessions at a sports event to say that they could be deductible. The IRS said that in their example. And they then went a step further and they said, well, let's say that you rent out a suite at a sporting event, and you're entertaining clients in the suite. renting the suite would be an entertainment expense and not deductible. But if you provided food at that event and the food was separately invoiced, then the food could be deductible up to 50%. So that's good news. And they compare that to the scenario of, well, maybe what if you rent out the suite and food is provided, but it's not separately invoiced, and so you can't really separate the cost of the food from the cost of the suite. In that case, the food would not be deductible; it would be considered an entertainment expense. So that's the long and short of it, which is what I said I see as good news, is that kind of the thing that I see most common, just the common business lunch that you do with various business contacts or clients or vendors or whoever, and that is kind of normal and ordinary in a business context, will be deductible. It's not going to be considered an entertainment expense. And like I said, they even came up with examples of where you go to sporting events and you could potentially deduct the food costs up to 50%. So all of that to me sounds like good news. We don't have to worry what we've been worrying about for a while, which is that food might be considered more entertainment and not deductible. We don't have to worry about that anymore. The IRS is making clear that that's not how they're seeing it. That food costs that would have been deducted before the law change probably are still deductible now, subject to the 50% limit. Okay, well, that's my briefing on that topic for now, and I hope to talk to you soon. I'm going to get back over here to doing some gardening.